Hey traders from around the world, it's your boy Jeremy Alexander Newsom with Real Life Trading, up to an absolutely sensational. It is Monday, the first day of February the 1st, and I hope you have some amazing plans for February. A lot going on in this month. Pro Bowl was yesterday. Didn't watch it. Neither did the majority of the world. One of the lowest rating events that they still do is the Pro Bowl. I am flying out this weekend, so 5 days from now, to go to Sacramento, California. Planning on having a meetup Wednesday, which I believe is the 12th of February. Let me just kind of confirm that while I'm chatting with you guys. But yeah, flying out for the Super Bowl. Going to have a nice little party in Lake Tahoe with a few traders. And it's the 10th of February in Sacramento. We're having a meetup at Lou's Sushi, one of the best sushi places I've ever eaten in the world. That's just my opinion, but it is delicious. And we're going to meet some traders there. So hopefully if you're in the Sacramento area, hit me up and let me know. Let's talk about the market. For the first week of February, I'm going to kind of read Brad Reed's plan kind of verbatim. He sent me this early this morning, and I'm spot on with what his thoughts were. He says, I think February will be a tricky month. At least the first few weeks are going to try to go super slow. That was his analysis. And today we did end up, I personally ended up losing 2R this morning, early in the morning, which is totally fine. That's kind of my daily loss limit, the max limit I'm willing to go. So just down 2R, stayed very disciplined and locked it in. Solange, she made 2R trading Apple and 2R trading Facebook. So a few traders did beat me today in the morning room, which is often pretty much the case. There's some amazing traders in there. And anyway, just chatting over the markets in general. Let's go look at the general market for just a moment here and kind of talk about what I think might happen today. So far is an inside day candle. Now the market is still open, so keep in mind things are subject to change due to volatility. But Friday was a very bullish gap. Let's not deny that at all. Friday was a good bullish gap, nice sized candle, really good volume, and you got a lot of volume down here. Had a trigger for a more bearish entry, never got filled. And at this point, we've absolutely decimated the 20 EMA on the daily chart, which is really kind of interesting. We've closed above it, and we're above it so far today. I think today stays an inside day candle and really kind of probably forms a 2 or 3 day pennant pattern, in which case I do anticipate us continuing up a little bit more. Why is that? Well, some of the other ETFs that have confirmed bearish, in my opinion, like the IYT, has a little bit more to retrace. Here's your weekly chart on the IYT, and notice the 10 EMA on the weekly is at 129.21. So right now it's about 5 points higher than where we are. So it would make a lot of sense, since this was a bearish gap action. There's a retest gap back on the IYT back from December to January. Makes sense that we would retest that and trade up into some of the moving averages and then roll over. So that's the IYT. Here's the IWM. IWM, very similar analysis. So I do have a weekly, well, I don't know about weekly, but it's a bear call spread on the IWM. Some traders are in the 105, 106 expiring next Friday, and I'm in the 106, 107 expiring regular February. So the 106 is a little bit below the 10 EMA on the weekly chart, but it is also above the 200 simple moving average on the weekly chart. So again, I do think we retrace a little bit on the IWM, maybe up into this area, and then possibly from there, a rollover. I really don't know if we're going to roll over, if it happens, but if we do, let's be prepared for it and see what happens. The XLE, also a few traders in some spreads with me on this one today. A little bit of a bearish gap down, but the day is just beginning. Here's the daily chart, and we're down 2% on energies. Some traders in a 61-62 bear call spread, which is right here, expiring also in February. So about 3 weeks on those. So I do anticipate a little bit more of a retrace, likely coming into the 50 EMA on the XLE. Very, very strong support. We're trading up into that support right now, acting as old support, new resistance. It'll be interesting to see what the overall markets do, ladies and gentlemen. And later this week, potentially, I am considering doing some 2008 similarities between the markets. And what's really interesting to see is let's go to a weekly chart, and this is the SPY. And on a weekly chart, you'll notice some interesting similarities between this and 2008. Again, kind of like that little head and shoulders pattern that a lot of people think we're building, but this one is much, much bigger. So that would be the shoulder, that would be the head, and that would be the shoulder. And we have not broken the neckline yet on the SPY, which is the S&P ETF. If that happens, so, if we break down, It'll be kind of fun for a little bit, and then it'll be really, really horrendous for a few weeks. Now, check this out as well. Just something that's interesting to note. Last crash we had in 2008, that neckline occurred December. Retest happened around February, March to May. So we still got some time frames for that to kind of occur. A little bit of a sell-off, breakthrough, a little bit of a retest around May, June, and then maybe some continuation lower. It will be interesting to see if that indeed happens. But again, on the broad markets, I am still longer term neutral, very neutral on what's going on out there. Just being very cautious on any swing trades. We don't have that many swing trades open. In fact, Bank of America, many of you have been following this swing trade. It did trigger Friday. So if you are in, beautiful. Haven't changed this analysis at all. Here's the weekly chart on Bank of America, and I'll just go to a line pattern so you can kind of see what's up. Notice this little channel right in here. Big channel happens around a year and a half or so, and we broke out and closed below it on a weekly chart with an increase in volume. That to me looks pretty bearish. So here's your weekly chart. Kind of come over here and again, check out that bearish volume, and this likely is a short-term retest. So experiencing and expecting something like this to happen on Bank of America, which would be a 1-to-4 risk-reward ratio. If it works, it'd be a good swing trade opportunity. Don't know if it will work, but got the risk mitigation in place just in case on Bank of America. Apple, ticker symbol AAPL. Apple's hanging out. Still think Apple's going to go a little bit lower at some point to test out this trend line. Don't know if and when it makes it there, but we are making lower lows and lower highs. So if Apple pulls up into a moving average, aka the 10 or the 20 EMA, those are likely short-term shortable opportunities. And that's kind of what I'm going to keep my eye on Apple. I do like this little trend. We have failed the 10 EMA a few times. If we make it back up to the 20, I'll keep looking to kind of go bearish into this trend line in the mid-80s on Apple. Amazon, I'm actually relatively bearish on Amazon after the earnings gap. I don't think that surprises a lot of you. Do have a weekly bear call spread expiring this upcoming Friday. Brian Bodie, who also, by the way, made 3 Rs day trading. I think he said it was the first time he ever day traded. On the 29th, he got 3 Rs. I wish the first time I ever day traded, I got 3 Rs. But anyway, great job, Brian. He's in a 605, 610 bear call spread expiring this Friday. I and a slew of other traders are in a 610, 615, which I absolutely love because it's above the 10 and the 20 EMA on the daily. It's above this gap, and it's above the 100 simple moving average. I am a little bearish on Amazon. I do think maybe even this week it makes it back down to 534. Today's gap, not bullish. The low of Friday, 570. The low of today, 570.31. If that gets taken out, I do anticipate us trading a little bit lower on Amazon. Google is going to have earnings here pretty soon. Going to be interesting to see what Google does, and I love the candles that are currently forming. Honestly, nice black candle right now. Anything is possible on Google. If we open really above 800, I'm bullish on Google. If we gap down and open right at about 684, I'm bearish. Now, the 200 simple moving average on Google could and might appeal to some buyers and could drive Google a little bit higher. We'll see where it opens. I do anticipate a little bit of a big gap on Google. I have no idea what direction, but if it gaps up and clears this resistance, I'm not going to be bearish on it specifically. Speaking of not being bearish on, here's Facebook. And Facebook, again, beautiful gap, great volume, great location, all-time high. Not buying here personally. Looking for a little bit of a pullback, and then I'll buy that bounce if it occurs. Dean Chance and Stan and really too many other traders I mentioned. I can't even keep count of how many people have Facebook. Did come up with an article not too long ago about buying the dip on Facebook because it is a bullish trend. The stock is going higher. So check out those articles. If you ever get a chance, hop over to reallifetrading.com. We do post stuff pretty often. And you can click on this little articles tab and click on trade setups. And any kind of article that I write in that has a trade setup included in it, you can get those for free. So here is 7 facts on the Facebook chart, and you mentioned that I mentioned that I mentioned that I would mention. I talked about in the article that I was bullish and I pullbacks on Facebook. So anyway, a lot of traders in Facebook. Great place to do some covered calls if you own at least 100 shares. And an all-time high. I still think Facebook reaches 150 in 2016. If the market doesn't crash. If the market crashes, obviously Facebook's going to go with it. It'll be interesting to see what plays out. Anyway, ladies and gentlemen, thanks so much for watching this Real Life Stock Review. If you have any questions or want to check out any other stock that's gapping on earnings, make sure to let me know before my next review, which is on Wednesday. And until then, remember, love life, live life, and trade. You rock. See ya.